Yeah, we had such a beautiful market maker model with ETH this week. So earlier in the week when I shared my analysis, I did caution because we had, this was a classic inducement, right? So we hadn't tapped the yearly open, but that could also be seen as pretty bullish. But on the futures, CME futures chart, we did actually hit the yearly open. It's slightly different because the futures market only opened on the third, I think, the second or the third. So yeah, they were slightly different, and it also did bounce from a CME futures gap. So I was like, okay, great. We do have a higher time frame price delivery array in the form of a CME futures gap. Obviously, this also tapped into the weekly fair value gap, right? The week before we had done that. So yeah, looking at the 4 hour here, we had the inversion. By the time I looked at this, I think it was this was Monday, right? So I got to the charts here. We hadn't inverted this yet, and yeah, once we got the inversion, I was like, okay, great. It's like I'm confident. So I looked to get into here at a 1 hour. I wanted a higher time frame, lower time frame entry model. So I got in the 1 hour unicorn here. That failed, but fortunately, I'd actually traded out of my spot margin position up here once we got what it was. It was a sell off on Bitcoin or whatever it is, and I was like, okay, great. So we're definitely coming down into that internal range, some form of internal liquidity. So I exited it around about this price, and then I re-entered here my spot margin trade, and with greater size. And so yeah, I rode this out because it wasn't invalidated yet. Although the 4 hour had inverted that, and I was like, okay, that's a red flag. And then I remembered, what am I doing? Look to the left. There's just this inversion being retested. This was a breakaway gap. This is the one where you look to enter on. So yeah, yesterday once we're in that, I actually added to the position over here. I actually fat fingered and well, not fat fingered. I didn't realize I was adding to the position. I accidentally sold, and then yeah, I didn't realize I was on the sell, and then I ended up adding more, and I was like, okay, actually, fuck this. Let's just roll with this. And so I took off risk at these Asia highs, not all risk, just the part that I kind of over risked on. So I took a bit there. I took a bit more that I over risked over here. And now I'm back to my original position plus some, having paid off some of the margin, right, the borrowed amounts. So yeah, for me, the reason because I took off here is because this market maker model is complete. So the reason I added to that spot margin position, which I'm in from much lower, right? This whole point of getting into this trade from here is to trade to this previous yearly high. That's my delivery path. Previous yearly low to previous yearly high, and this is just a bonus, right? That's the all-time high. But yeah, for me, I've taken off. So my point is, sorry, that adding to that position was to sell that extra position or extra part of my position up here, trading this, right? And then the remaining position plus some I'm leaving for that target, which is the previous yearly high plus the all-time high. So typically with the market maker models, let's just zoom out for this. The last, it's a bit messy. So the last part of a market maker model is always the most explosive. So I'm looking for a massive squeeze. I'd prefer to see a massive squeeze, although I'm prepared for this to roll over and then take out the yearly open weekly inversion and then have that huge pump. I'm here for that. I'll add to my position over here as well. So I'm in a position to hold if there's a pullback from a spot margin position perspective, because I am anticipating this to expand. At least, yeah, this is where I'll take a good portion of my trade off. This is where whatever I have remaining, if it gets to this point, which I expect it to, right, with the standard deviation projection, I expect it to hit this level, and with what I have remaining will be a really good trade. But at the same time, I'm very open for this to be swept. I don't think it will, and the reason being is that this daily fair value gap, which is yet to be confirmed, right? So, I mean, we might even expand today and not confirm a sweep on the daily. So that's not the end of the world though, because the bias is still up. And even if we do just reverse here, I'm still bullish, right? So you're just going into a weekly fair value gap, sweeping a previous weekly low, into the yearly open, into this weekly inversion. I'm here for that. If that's the case, this move will be massive, and I expect if we don't take this out, this previous yearly high, and we come lower, I'm exceptionally bullish. Why? Because we haven't hit the terminus, right? So we haven't hit that original consolidation where it started and where it will terminate. Which isn't to say it won't go higher, but that's where you look to take from profits and then hold for expansion or extension to this 3.5 to 4 standard deviation. So I would like us to, I would prefer us not to take out this level before rolling over. When I say rolling over, just retracing basically, right? It will be a reversal from a kind of low time frame perspective, but from this market maker model, very happy for us to manipulate lower, sweep out the previous weekly low, yearly open, weekly inversion, etc., while keeping this intact, because now we just got a relatively equal highs. It'll probably become if that is the case, and it happens this month, then it'll be a previous monthly high that we go and sits just above this previous yearly open, basically just relatively equal highs, right? And that gives me a real clear, clean draw on liquidity to trade back up. So yeah, I'm not opposed to something like this, because I think that will be so explosive if that is the case. So looking at the daily then, just close to the time frame, or zoomed in view. So yeah, what we want to see now, right, for continuation is just this daily to confirm this fair value gap. It doesn't necessarily, look, if it sweeps this, yes, the next day we should be bearish, but even if it does, it just moves into this fair value gap, which then we look for supports and low time frame entries for continuation, right? So it'll just be a high time frame continuation model from a daily perspective, and then we will look onto the 1 hourly charts. And with ETH, what it's been doing over the last, ever since this pump started from way back whenever it was, every Saturday, like we pump on a Friday, and then Saturday it retraces and then makes a low and then continues. Here's the Saturday low, right? Where else is it now? There was that Saturday. Okay, Friday actually made the low, right? Market maker model. This Saturday as well, market maker model. What was this? This was a Tuesday. Friday made a low. This was Sunday, made a low. So yeah, I mean, this thing is just, it's pumping. And there's that 4 hour sweep. The 1 hour has inverted here, but that's fine. What we want here is just consolidation. So it can chop around here, that's fine, because as long as it chops around there, this daily will then confirm this fair value gap, which is what we want for price to trade into, act as supports, and then deliver price to potentially higher. But at the least, we want this to get taken out, so we want to then just displace above that. That's ideal. If we displace above that, then fantastic. We don't even have to take that out. We can then just reverse from here, which is just a hard time frame retracement into this zone here. So yeah, either way, I'm just still bullish, and I'm not, I want this to get hits. That's my low hanging fruit from this weekly market maker model. This is where I really want to get to. This may take more time, especially considering where we are with Bitcoin. So looking at Bitcoin on the daily, this thing has got so much low resistance liquidity, right? But from the perspective of ETH has actually swept these already. So there is SMT, but I don't expect us to leave these highs. I think we still have I think we still have expansion to go. I would love to see Bitcoin kind of just catch up, right? But so from the daily perspective, we have inverted that. We've come into a weekly fair value gap down here, right? Refined to a daily here. You've inverted this, and so from a daily perspective, we expect continuation to some of these highs, if not full continuation. Because listen, the moment we start hitting these highs, you're going to start getting a short squeeze, right? These are all engineered. This is all engineered buy side liquidity, right? Why is it buy side? Because people who went shorts, right, their stop loss is in the form of buy side because they have to buy back what they sold. And so if they get triggered, they then add to long positions to the market essentially. So from a daily perspective, we again want to see this daily confirm a gap, which is nice because it's correlated with Ethereum then. And then we got the weekend to just, do what it's been doing, at least on Ethereum. And look for continuation. And what we need then from a 4 perspective, I want to see the 4 close above this level. That's the final resistance for this market maker model. Once we get above that, I then expect a squeeze once you hit these levels. So, I mean, Bitcoin is obviously a lot weaker. I want to see us get above that. And in terms of if you're looking at it from a forward perspective, there is a gap here which is now inverted. So, it doesn't look great. I mean, this is also the 4th candle should, if you're using T-Trade's kind of model where he talks about the 4th candle, trade the 4th candle. This would be a sweep. There's your 4th candle. I guess maybe that trades, but already done for, depending on what your, there we go. So that just closed. So we will see what happens because we could, this is where you could roll over from Bitcoin's perspective because it's swept all these highs. And then you look at something like NASDAQ on the high time frames. And this is just retraced into that 4 level, got rejected. And so this is the level I was talking about earlier this week where I'd expect us to trade up, and that's where you could get a reversal, at least a lower time frame reversal, and then potentially continuation to these lows, or at least these lows. But the 4 has held, but now you're stuck between 2 fair value gaps, which is low probability conditions. So when you look at the 1 hour, at least on NASDAQ, we don't want to look at others. When you look at NASDAQ, let me try to find a clean chart here. Sorry, I'm using a lot of this for notes, so let me just clean this up quick. I don't even know why I say these things, to be honest, because I never go back and they also change when the contracts roll over. So, so from a 1 hour perspective, I mean, since we dropped into that 4 hour fair value gap, there's your 4 price delivery array, and there's the liquidity sitting above. But of course, we're sitting inside of this 4 hour fair value gap. So, there is resistance and we'll have to close above that. But when you look at it from an hourly perspective, you have closed above that. So has ES traded into that 1 hour gap? No, it hasn't. So for me, what I'm looking for is for price. I don't think I'll trade this today. I've had such a great week. And these are, unless we close the 4 above that, then I'll look to trade continuation to these highs, and I'll treat this as a market maker model. But I'd like to see us, in London here, drop lower into this 1 hour fair value gap I was looking for this to make a low in London. That's probably not going to happen now. Oh, okay, what am I saying? It's 4 a.m. So this could very well drop like that. And then going into 6 a.m., you could get a reversal around then. Potentially, coming up, ideally not taking out Asia yet, making relatively good highs with London and Asia, having taken out Asia, and then, London took out Asia. And then you get continuation with New York. So that's kind of the profile that I'm kind of looking at. And it'll be ideal if we up here, by the time we go into New York, then you would have inverted that 4-hour fairly gap. Once we've inverted that, then my bias is longs. I'm looking for longs going into New York, and I'm looking for continuation. Even if we hadn't, it'll be great then if we can get a pullback, sweep London's lows, and then continuation. But we'll have to see. It's all about that 4-hour close above that, which might only come at 10 a.m. and then you just trade the 10 a.m. continuation. Because for me, the draw, if that were to be the case, are the relative equal highs left from yesterday with ES. So yeah, lovely relative equal highs here from London. But this has got a lot of work to do. So there is a valid draw. You've come from a 4-hour fair value gap, but this resistance you have to confirm for continuation, because we've got the reversal down here. Now we need to see continuation to confirm a high probability towards this target liquidity. So yeah, if that's the case, then it gives Bitcoin should follow. And then we want that 4-hour close above that. So you can see the correlation with these markets. Of course, ETH is just beast mode. So yeah, we just got to pay attention, because as I mentioned, like if we start to roll over on MQ, NQ on and ES and stuff like that, then yeah, Bitcoin's going to follow, right? Because we still got this fair value gap just above here, and I like the fact that we've come just above and stops. Yesterday I traded into this gap, and you can see how it's respected that. That's a new day opening gap, I think. So yeah, it's an interesting dynamic in the markets at the moment. We don't have any news today, so yeah, we'll see what happens. But from ETH's perspective, as long as NQ and Bitcoin and stuff can kind of hold up, it'll be great to see Ethereum close a candle body above this and not be a wick, as well as then you'd confirm that fair value gap. Then then it's a high time frame continuation model using the daily as your high time frame. What happens after it hits that high, it's yet to be seen, of course, but you just got to take it one step at a time. But nonetheless, just to recap again, we've got the weekly market maker model with this as at its low hanging fruits. So yeah, and then looking also from a weekly perspective, if that weekly candle close above that, that'd be great. It would be even better if we can get above that level there, that previous weekly high. And of course, if we do get that daily fair value gap confirmed today, Saturday trades and a Sunday trades gets a close. If we can close the body, around this level, yeah, even if we do some crazy manipulation lower, you've got these relative highs for that market maker model. So yeah, if it's not consolidation, then give us expansion, right? Give us that short squeeze. People shorting because they're offside. You can tell because Twitter and part of the community is very quiet. A lot of people are probably not on this train, so you could very well get a short squeeze, which I'd love to see. And if we can get closures around here without taking the previous yearly high, and then get a pullback to create another market maker model, that'll just be gold. And then you can expect a real explosive move. As I mentioned, the last phase of a market maker model is always the most explosive. And yeah, so that's the analysis there, guys, for Ethereum, Bitcoin, with a bit of indices involved as well. And yeah, hit me up in the chats if there's any altcoins you guys want to look at. Also want to look at XLM. Nick, is it you that trades XLM or is it Cryptoholic? So I always get you guys mixed up. And it's the profile pic, which I know made like it's Cryptoholics that that meme. Yours is a BMW lights. Yeah, just let me know in the chat there, bro. You don't hold XLM, man. Okay, so it's Cryptoholic then. You're the XRP king. What am I saying, bro? Oh, and in fact, actually, you removed that from the name. What happened, bro? Okay, so I'm going to stop the recording here, and we'll get stuck into some altcoins.